Hello, it is December 4th, 2025. It is 12:55 p.m. here, which means it is 2:55 p.m. in New York, which means we are 5 minutes before the daily COMEX settlement, where a lot of things happen. Margin requirements are determined, options are valued, hedges are adjusted, positions are squared. CTAs, which are commodity trading advisors. Large funds use these things. They follow specific rules. They rebalance their books. So basically, what happens is movement, price movement, direction is determined, trajectories are launched, etc. Um, I last night I thought the breakout was gonna hold. I thought things were gonna go crazy. I thought it was gonna come back after the Mumbai fix. I thought people would realize that I predicted the fix would come in higher than spot. I was correct. It did. But I think maybe not everyone in the market understood what that meant. And I think that's probably still true right now. But there is still physical demand, there is structural demand. And in the last few minutes, we've seen, all morning, we've basically seen resilience from silver. We've saw some big washes earlier, but we've seen support come in. And the macro, we can argue over why it went down last night during the thin trading hour, just like the night before. Was it manipulation? Is it just macro factors had a big effect because it was a thin market? It ultimately doesn't matter which one of those it is, because whichever one of those it wasn't based on the physical reality of what's going on in the market. A lot of the macro factors that people trade off are a bunch of crap. These algorithms and traders that are programmed to act certain ways. When bond yields rise, they sell metals. This doesn't make rational sense. To them, it does, because they think, oh, I can get a higher yield. Let me sell gold and get bonds. But a higher yield is because people are pricing in inflation risk, which is no good for bonds, or because there's default risk, which is no good for bonds. It means the bond is a less good instrument in economic reality. And so people shouldn't trade them this way, even though they do. There's a lot of bad information and a lot of fools in the market. But it doesn't matter, because there's still a structural shortage appearing. There's still massive open interest that got rolled to March that they simply don't have the bars to fulfill. There was still all the stuff we saw, the backwardation, the lease rates, everything that happened in London, the bars being shipped from New York. There's still the shortage, low inventory levels in China. All of this still exists. All of this is still the structural support for a bull market. And now that you've had this wash, a lot of weak hands have sold. A lot of bad decisions have been made, and only stronger hands. You might not see a lot of resistance now that macro sell-off is done, because now what's happened is, even though yields just rose, they just ticked up, silver was just resilient and actually rose in the face of that, which means even the macro isn't pushing it down anymore. So basically, the paper shorts are out of ammo. And in my opinion, watch out above, because there might not be many offers between here and the breakout levels yesterday. And frankly, there might not be any offers above those breakout levels. And frankly, the fact that it did sell off during that thin window might indicate manipulation, because shorts are really going to get hurt if there's no overhead offers once you get north of 58.60. And especially once you get towards $60, which could happen real fast. So you can still see a crisis even today in the last couple of hours of trading in New York, or tonight. We are still in the crux of this. Yeah, my timing, my pinpoint I have made mistakes pinpointing this thing, but I'm telling you it's fucking real and it's happening.